Hi, this is Mark with my analysis for the week commencing the 23rd of April. When I traded stocks in the 90s, I used to trade purely from fundamentals and occasionally would look at charts and thought it was all nonsense. Then when I started learning to trade Forex in the early 2000s, I learned technical and only traded technical, including a $1 million managed fund. After 2008 with the crash, I then started to pay attention to some fundamental analysis. However, this is Paul Tudor Jones. Paul Tudor Jones, one of the wealthiest men in America, is also the CEO of a $40 billion hedge fund, and he believes that price moves come first and fundamentals second. Our own Pierre, not in the same category, but our own Pierre feels the same. Now, the reason I'm saying this is I showed you last week, and I've told you this many times before, there was MACD divergence on lots of pairs and on metals as well. This is gold. And if you're not familiar with MACD divergence, what it means is that the high here is higher than the high here. And yet on MACD on the trigger bar, the high is lower. It is a clue that price is possibly going to turn back down. And on this occasion here, this is gold again on a daily. So daily and weekly, it suggests that gold is going to drop. So I explained on the update during the week, I had shorted a gold ETF because I don't want to sell my gold. I will be looking to buy gold. If we get anywhere back down around 1900, I will look to buy more. And especially if we get down to 1800 or lower, because I do feel that there is a crash coming. And it's not just confined to crypto and gold, also on the Swissy, for example. MACD divergence here on a weekly, again, suggesting that this is likely to go back up again. And on a daily, I think it is on the euro, suggestion that it's going to go back down. So how is that going to help us for the weeks ahead? So we'll have a look at that in a moment. First, let's have a look at the news for the coming weeks, which is going to be important for what we are going to look to trade, as well as, and at the end of the period after NFP in a couple of weeks' time, we could sit back and see if these fundamentals did actually work first or not, aka Mr. Tudor Jones. Now, last week was a messy week. We had some positive news and some negative news for most of the pairs. And a lot of it, like the flash manufacturing in Europe, the flash manufacturing was less than 50% and worse than expected. And this is the presumption. Anything below 50 is seen as recessionary, and everything over 50 is expansionary. So the economy is doing well. So manufacturing is down clearly throughout Europe, and more worryingly in Germany, because they are a big manufacturer and big exporter. But flash services are all up. So how the heck do you make any sense of that? Well, its bottom line is, in truth, it's not easy. And also you have to bear in mind government statistics. For example, the UK's inflation figure is supposed to be now around 10%, and yet from the government, this is not my conspiracy theory, the British government acknowledge that food and non-alcoholic drink is up 19.2%. And as I say, it rose the fastest rate in more than 45 years over a 12-month period of time. And then on top of that, you've also got mortgage repayments are up 61%. I personally have some interest-only mortgages in properties in the UK I have held for many years, and the interest has now tripled in the last year, 18 months. And clearly that will bite into the ability of people to pay their mortgage, pay for food, and therefore is not good for the economy. Now, if you look at alternative stats from Shadow Stats in America, and I've shown you this before, governments changed the way they calculate all sorts of things, and governments only ever do that, not for transparency, to suit themselves. I've explained this before. We'll cover this in more detail in the live session on Tuesday. But if you use the old calculation that the US government, for example, used prior to 1990, then the official rate of inflation in the US, allegedly around 5%, would actually be 9%, and it peaked at around 15%. So these are things that you should always bear in mind. And the US at the moment, allegedly, according to the government, food inflation is currently at 8.5%. American members, let us know. Tell us in the forum, tell us in the live session. Do you find that this is correct? I remember reading a few months ago an American accountant who had done exactly the same weekly shop, and his shopping basket was up over 40%. I know it's coming down now, but is this true? I have my doubts. Now, for the week ahead, there's not that much important news. We've just had a choppy week, and we could well be on for the same thing again, because what everybody's actually waiting for is the following week. The following week is the Fed fund rates. Are the Fed going to stick up interest rates in the US again? And if so, by how much? That could rock the markets, and it could well be that for the next 7-8 trading days, price was just going to chop around and not go particularly anywhere, waiting for this. And then it could also rocket again on NFP Friday, American jobs, non-farm, which we don't trade anyway. So it could be choppy for the week ahead. But let's have a look what is coming up. You've got consumer confidence in the US, positive, makes no sense. Aussie CPI, that's going to be important early Wednesday morning. So if you're going to take Aussie trades, either be out of them or have profits locked in and stops to entry over the night on the Tuesday night, Wednesday morning, for those of us in Europe. And then you've got advanced GDP quarter on quarter for the US. The revision was down from last time, so that is going to be important for the US. And then Friday, there's a lot of BOJ news, and there have been some changes in Japan with the new finance minister, so it will be interesting to see how that reacts. This is a good article from Mark to Market. I will share you the link in the post. He's very good at analysing everything that's going on, and he's particularly having a look at what's going on in Japan, which obviously affects the Japanese yen. So during the week, I showed you some potential 10 times trades, so 1 to 10 risk reward ratios for FX. I also showed you, and I'm showing you again today, where I'm looking to buy gold and silver again, and crypto. So if you missed that, check that out. We also have James, one of my private guys who focuses on fundamentals. He is now updating this area here. So far he's done the USD index and the Euro index. And James is also posting now in the fundamental blog. So let him do the work for you guys. If you don't like doing the fundamentals, James will do it all for you. And that's Andy, our tech guy, who also covers fundamentals. And this is James's update for the Euro. So lots going on. Technical versus fundamentals. Personally, I use a mixture of both. Now let's have a look at the technical analysis for the week ahead. So as I've shown you, the dollar index is in a triangle. MACD suggests that it is going to go back up again. If it went on a run, possibly up to 108, 110, I think that then it would see a bigger drop later in the year, but that's just my opinion. Let's see what happens. As ever, do what the charts tell us. I showed you the other week when price was up here, I said that the dollar index was most probably, and remember we're trading probability, going to bounce here because it is a double, triple bottom technically, and I showed you how you could use that information to short the euro rather than the Swissy. Oil is breaking back down again. If you're trying to get into oil stocks and think you missed the boat, then this could be the opportunity for that. Gold, if gold gets back down anywhere around 1900, 1850, I will buy more gold. I would like to buy more gold in here, 1840, and particularly if we get any spikes down, I think that my strategy is buying gold and silver, and also mining stocks for leverage. And again, we can cover this on Tuesday. And here you go on daily. You've got in here 1880, 1890, trend line, 200 EMA coming up behind it, 78.6 fib. Definitely a buy for me down there. MACD divergence, a clue it was going to drop first. Silver is still holding above 2460, major previous support and resistance area. Again, you've got MACD divergence on here on a weekly. And I am interested definitely to buy more silver if we get back down to 22.50. And I showed you last time when it came in here, I bought at 22, 21.50, 20.50 and 20. So those would be the levels. Again, I would buy silver. Bitcoin is dropping. I already own Bitcoin. It's bought and paid for. I'm not in a rush to buy more at the moment. From a trading point of view, without leverage, 26,000 would be the first area I would think about it. Ethereum, I actually would fancy Ethereum more. If Ethereum comes back down anywhere around 1670, I would be buyer of Ethereum. Dollar Swissy. So the dollar Swissy, we're at a bottom and we've got MACD divergence. The issue as ever, there is no There are no multiple reasons for the stop, and therefore I prefer the euro. I showed you this the other week. The euro's come up to the 200 EMA. It's at 110. When I made the video 10 days ago, I was saying 110 is a massive area of previous support and resistance going back years, and those of us who traded it last year will remember that's where it was bouncing off. So multiple reasons to hide the stop behind. So this was what I was talking about the other week. You could have gone in here. You would put your stop above the 200 EMA for an aggressive entry. You could, it's too far really for up here, but that is giving you a little bit more confidence. So I would be more conservative, prefer it to drop, and if it drops, then I will be a buyer anywhere around 107 for the Euro USD. CAD, I took this last week and caught some of the move. The big area is still down, obviously down at 130, but that would have to be a big move down. This is currently in a range, so this is the area that I would be interested to buy the USD CAD again. So anywhere around 133.10, but this would be, I wouldn't place a forward order on this. I would be more likely to watch it on a 4-hour chart. Pound, MACD divergence suggests it's going down. It can't make its mind up. I've just shown you inflation is in a bad place in the UK. I have shorted the UK stock market. I think the euro is a better bet with FX. I mean, look at this. The pound at the minute is just stuck. It's like it's on elastic. It's going up, it's going down, up, down, up, down. Can't make its mind up. Even the candlesticks are not really helping, leaving it alone. AUD, I would be interested to short if we get back up at 7100. Intraday, then 70, I think 70 I was looking at intraday. So I'll look on the daily chart. 6800 as well. I know some of you are looking in here. So I am more interested to short than to long. Don't be greedy with it because it's in a triangle now and it's getting tighter and tighter. Once again, I think I would prefer to leave that one alone. NZD, clearly we have been moving down in the last few months. So once again, we look for a pullback. I would prefer this over the Aussie dollar. So anywhere in 62.30 to 62.50, I would be interested to short the New Zealand dollar. Aussie CAD, now my bag, I shouldn't have left this running on the, this is a demo account. So this was one I showed you on Thursday. Initially I had my stop up here. So I was risking 35 pips for a potential 130 pip gain. So 1-to-4 risk reward ratio. Now what I did do on Friday, I moved the stop nearer. So I have now half the risk on this trade, but leaving trades up over the weekend with only 30 odd pips in profit is risky. There's always a danger your stop would get dropped. I will be looking to short this again though, anywhere in here around 90.80. Euro pound, again, don't leave orders in over the weekend. I only do it on this demo account I use for training. So I have orders here. I've split the order. I've got 87.30 and I also have an order at 87.10, I think it is, 87.7 on this one. So again, it's in a range. It keeps coming back down here and just bouncing back up again. Both these economies are as bad as each other at the minute. And from a point of view as a move up, if you catch the trade, I wouldn't take it in here because the potential gain at the minute is only 30 odd pips. It's bouncing off this daily trend line. So if it would pull back into here, then you think, well, okay, first area of resistance here. I would definitely take off 80% of any potential profitable trade here because probability is against it. If it carries on, the 20% could go a long way. Pound New Zealand, I showed you last week. The big area for me is all the way back down here. And you may think, well, it'll never get there. It's 800 pips away. The guy's mad. Well, Langin said that. It did 600 pips that day. It did 950 pips that day. So this is a wild ride of a pair. I wouldn't touch it where it is now. If you look on a weekly, you can see that price last week has broken a weekly trend line. But there is nowhere for the stop for me, and therefore I would not take that long or short. Pound Aussie, similar scenario. Possibility of it getting down here better than the other one I've just shown you. Here you have the intersection, almost a perfect setup really. Again, it's a wild pair. But here, 80.70, I have an order. I have the stop down here, which is 70 pips away. But this is a potential 1-to-8 risk reward ratio. and therefore I would definitely look to place a forward order on that one. It's also, for those of you who like, I don't like this pair, but anybody who actually likes this pair, if it came back down to 79.10, I would also be interested to long that pair. Pound Swissy, been waiting ages. Again, it's in a range. The range is getting a bit tighter now because we now can see that we're getting down here. So I have a forward order here that won't set and forget. I've been waiting months for it, so I've been trading other pairs. 1.1380 is interesting to short. No multiple reasons for the stop down here at the bottom. Aussie New Zealand, I hate this pair with a passion. It whipsawed on me forever. I don't trade this, and I know it caught some of you out last week. It's nasty as this pair. It goes to sleep and then it goes crazy, and it also has a habit of just piling straight through major areas of support and resistance. Those of you who like it, well, it looks as though it's going back up again. Pound CAD, another one down here. We need to adjust this slightly. I am interested to long the pound CAD at 163.10. It's at a double top. Those of you who like to counter trend trade, well, it's teasing you, but again, where are you going to put your stop? Euro Aussie, once again, I have split the order in two. I am looking at 157.18 and 156.40. So half of the trade here and half down here. Final few. New Zealand dollar CAD is messy, leaving it alone. Euro CAD, I need the pullback, and 144.50 is my preferred area on this one. So you see there's a lot of them. There's a similar pattern going on here. They're all coming up. Many of them are coming up to double tops. But again, you've got this clue that MACD divergence could be a clue. This is going to turn back down. I'm going to say I don't like this kind of trade because of the risk reward. If I was going to take it, sorry, because of the lack of places for a stop, if I was going to take it, I would halve the risk. I would prefer it to come all the way back down here for a long. Okay, the rest of them are really on their way. Now we need to have a quick look at the yens. And that article by Mark to Market is explaining what the Japanese investors have been up to, and there is a new governor of the Bank of Japan, so it's going to be interesting to see what he does. This could well be a head and shoulders pattern I showed you the other month on a weekly. So if this was to break, that would suggest a 2,000 pip move on the dollar yen, which would take us spookily down to recent low territory. So my overall thinking for the year is that this is more likely to go down, but trade what you see. We got a break the other week of a major trend line and a 200 EMA. So this is a major break of an area. Clearly it's come back down and retested it 3 or 4 times. The potential 140 pip gain here, definitely one worth watching. Out of the yens, the dollar yen is the one I would be most interested to take. This is the Aussie yen. I missed the entry last week by, I think, quite a few of you, 7 or 8 pips, I think, the blooming thing. I have an order here where 64 pips stop, but the target I have down here is 400 and odd pips away. So the Aussie yen, CAD yen I do not. It's back into all the EMAs. I don't like that scenario. Euro yen, you would need a pullback all the way back down to 141 for a potential long. And the same with the pound yen. Again, another pair I really don't like, but 162.10 would be an interesting area. So it could be choppy for the week ahead, and then the week after could be crazy. So all fun and part of the game with FX. On Tuesday in the live session, we'll go through all of this. If you've got any questions, put them in via the help desk before we meet. Or if I don't need to prepare, if it's nothing complicated, you can ask me on the day if you get along to the live training session. So have a great week. Let's see if Mr. Tudor Jones is correct, that all these MACD clues, maybe he is right. Let's see what happens next.